All right, well, we're back with another
Back.
episode. Excited to talk about something I think that's pretty relevant today.
Yeah.
Especially in light of the challenges in the financing market and
Definitely.
Fed's recent announcement, and uncertainty in the interest rate world, I guess.
Absolutely. Everybody's been waiting with bated breath.
Yeah.
Myself included.
Yeah.
The days of 2% interest rates are
never
fond
come back.
memories. Everyone says they're never coming back. Is it never? Is it never say never?
I don't know. I mean, there are economists who say that's like a never going to happen again type thing. And I mean, who knows though? I don't think anybody thought it was going to go low to begin with. So it's like maybe it could.
That's true. Did it really catch people off guard? What led to the 2%? Because I feel like at that time I was so heavily into residential, but residential I feel like you're very much on the outskirts of the financing portion. People kind of come to you with their financing. So whereas commercial, you're more intimately connected because the financing doesn't typically happen until you find the building. I mean, obviously you have your resources, but once you find the building, which was always that always seemed backwards to me, but do you recall what happened in that time? Was it 2019?
Yeah, I mean, it was the Fed trying to sort of spark the economy. Really.
Oh, okay, because we were coming out of COVID.
Yeah, that was the function of that, really. And it just kind of got out of control, I guess.
Yeah, it must have, because I secured my parents 2.675. They had found a loan, and it was 2.8. And I think some change. But at the time, the company that I was working for had an in-house lending. So I leveraged the discount that I would be able to get through them, and they matched it.
Nice.
So I was able to do a little...
That's great. Oh, man. I'll never refi again their whole life.
Ever.
So we went from a period where rates were ridiculously low to where they're ridiculously high.
Yeah,
They've come down a little bit,
climbing.
but are still sort of like flat, right? And I think today's topic that we want to go through kind of is a byproduct, I think, of partly byproduct of interest rates, but I think partly byproduct of supply demand imbalance, maybe. So today I guess we're going to talk about leasing, right? Because I think it sounds like what does leasing have to do with financing? But I think because rates have been crazy and supply demand function is off, which partly is due to interest rates too, ties back to interest rates. I think leasing's been pretty,
it's the low-hanging fruit.
Yeah.
It is the low-hanging fruit. I think it's also what people can wrap their head around. There's start and stop dates, as opposed to buying is in perpetuity until you decide that you want to sell.
Yeah.
I think people just need a little bit of certainty in times that feel a bit rocky, wavy, shaky.
So people in the market today lease primarily because either they can't find what they really want and need for their business and their growth trajectory, unfortunately.
Construction is high too.
And the cost is really expensive, right? Both construction costs and interest rate environment.
Exactly.
So people are really focused on, we're seeing leasing right now, right?
Yeah. The leasing landscape is interesting because you have office that I guess it's making a comeback in a way. I mean, how
many articles do you see where it's like 1 week it's saying,
a lot,
like great like progress, growth, whatever in the suburbs, and then the next week it's like, office demise is coming.
Yeah, it's like a seesaw.
It is like a seesaw.
One moment it's up, the next moment and there's no in between. They're not saying, "Hey, it's trending at a steady pace." It's kind of feast or famine. Like, they've been highlighting cities where New York just did a major office deal. I think it was last week that gave the impression that office is still an asset class to think of.
You're picking like the greatest market in like the whole world.
Exactly. But I think overall retail leasing is where you will find the most consistency, because flex space depends on where you are. I want to say more Philly area flex space, because you
Yeah,
have these experiential entertainment opportunities that can
sure,
leverage the flex space, and then you have the
sure.
population to accommodate it, or drive for people who are New Jersey, New York, and Allure to
Yeah,
come check it out.
sure.
In the suburbs, though, where you have your retail shopping centers in places that people work and
Well,
live and play.
well, you're gonna lease no matter what. I mean, so there's like
Yeah.
this like when we talk about leasing, it's kind of like housing in a
Yes.
sense of you have this rent by necessity group,
Yes.
right? And then you have this rent by, you know, discretion,
Mm-hmm.
right?
Yeah,
Like,
absolutely.
and or option, whatever you want
Mm-hmm.
to call it. And I feel like when you're a small retail user, just talk about retail for a second. If you're a
Yeah.
small retail user and you want to be in like an anchored center, a grocery anchored center, or even a junior anchored center, like the reality is you're most likely not going to be buying that shopping center to put your
Exactly.
1,200 square foot storefront in there. So
Exactly.
your leasing is always what you're about,
Yeah.
pretty much,
Yeah,
right?
absolutely.
Yeah.
Your brand will dictate what your
Yeah.
capacity is.
Now you're like a 5, 6, 7,000 square foot restaurant user who needs something freestanding on like 2 acres. You could definitely buy. It just depends on how you
Definitely buy.
allocate capital and who's involved, but you
Yeah.
could definitely buy. So those are the people that like could pivot either way, but
Yeah.
construction's
And
expensive and rates are
now might
expensive.
be a good time for them, because we're starting to see a trend. The second generation smaller footprint is what I think the behavior since we've come out of COVID. Now, I don't think a lot of people have taken a moment to stop and be like, oh, now that we're XYZ number of years outside of COVID, how have we responded? There's so many other things going on. We just, came into a new election,
Yeah.
change in power, so to speak. But I think people get wrapped up in these major things that are happening that we don't take a moment to really take inventory of what's happening. And now convenience is so much heightened because people are working with the cost of living.
Yeah.
People are working 2 and 3 jobs,
Yep.
as opposed to you just work your one job, you go home, you maybe go to the grocery store, you make dinner. Now people are on the go. I feel like so much more now than we were before, even
Yeah.
though we've always been on the go, but I think that was more choice driven. You wanted to be outside.
Yeah.
Now we got the opportunity to be back outside, and people are like, I kind of want to be inside, but I don't have the time to do that. So what can I grab quick to accommodate me in between
Yeah.
my
We
small
and
snippets
we
of period
talked about that last
time?
last episode. I think we had touched on just the convenience factor alone, how it's sort
Absolutely.
of driven things.
Yeah.
I think also
Yeah.
like retailers understand the economies too. Like you could
Yes.
drive sales per square foot through the roof on a smaller footprint,
Absolutely.
and
Because the scarcity.
yeah, and you don't have to hire in theory as many true service oriented employees, which is really
Sure.
tough. Employment is like another ridiculously tough thing right now.
Challenging,
Yeah.
especially in the management perspective. There's a huge gap there. People, I think, come in COVID and coming out of COVID, quiet quitting had become this like new attitude that a lot of people had taken on. And working is challenging. I mean, as entrepreneurs, you have a little bit more control over your schedule, but if you're working with a lot of clients, they're going to have a high demand on your time. So I think people are overall feeling a burnout.
Yeah.
And there's a burnout kind of across the board, obviously varying degrees, but people don't want to bite off more than they can chew. And I think we've been this gregarious society that is we go big or we go home, and now people are like, I don't really have the bandwidth to deal with anything outside of the scope of what I choose to kind of carve out and slice out. And I think with retail, you are visible, so you can hopefully encourage clients or customers to come through, and that makes it a bit more tangible. You're doing something, so it feels like, okay, the business is happening, it's working. But that all remains to be seen, depending at the end of that quarter or year where you really reconcile what's happening. But yeah, I think people are really like, I can manage leasing. It's a 3 to 5 year situation. In that time period, if things go crazy, I've got a sublease clause.
Yeah. Yeah.
There is some type of an out.
Right.
And I think that that's what's driving people now.
People drive because of there, absolutely.
Yeah.
And I think like location has become so important lately. Like everybody flies to flight to quality. Everybody focuses on that.
Yeah.
And
absolutely.
I think when you have that happen, it's like there's not a whole lot available now.
No.
Anymore,
yeah.
you know?
The landscape is such that either you have a very specific use, and so it requires a certain amount of square footage, and then what area you want to be in, whether that's close to your home, close to the customers that you're looking to serve. So there are more elements that will dictate where you need to be. And I think that that certainty is grounding people. And then they know, okay, it's almost like the household income is an afterthought beyond, this is my lifestyle, this is where I am. If I'm going to set up a business, I need it to be close to where I am. And I also then to want to attract this type of customer who probably has a bit more disposable income.
Sure.
But before, it was like, I feel like before the income and the location and the people were more driver, but now people are taking a step back and saying, I'm part of this as well. If I'm going to be keeping this afloat, it needs to be in close proximity to my life so that I can juggle and manage the two.
Yeah, definitely. So, with leasing, there's so much to like go through, so many different nuances depending on where you're at in terms of not only location, but asset class, because it really differs across the board. We know that particularly with like office versus small bay flex, right? Like very different leasing scenarios happening and situations going on right now. And financing for that matter.
Yeah, absolutely.
So I guess we can sort of keep the conversation general, because there's so many of those paths you can go down. I mean, we see a lot of, both on the investment side and the brokerage side, we see a lot of the retail and office side of leasing, but flex is definitely something we work on. You work on as well. So we could definitely shed some light on that. And I think the reality is those small spaces are really hard to find.
Yeah.
Right.
Small spaces are harder.
And you're being like forced to lease, right?
Yeah,
but you can't find a space.
Yeah.
It's really what's happening in the market right now.
It is. I wonder if there will, if it will ever gravitate to this cohabiting situation where perhaps somebody takes on a space that's larger than they can accommodate, and
like retail co-working.
Yeah, and then bring in somebody else that would complement the business.
So that's definitely happened. I mean, we've seen that with a lot of these like food hall trend concepts that have opened up, and like market style concepts. And for some people it works, some people it doesn't work.
Yeah, it's true.
I mean,
you gotta really vet the other.
Yeah, and also does it work with your business? I mean, we've seen a lot of businesses move out of those spaces who are more like treat it like an incubator style space. Like they start their concept out.
Yes, that makes sense. And then you are able to graduate and grow.
Yeah, low fit out, maybe high cost per square foot, but like manageable monthly. And you start your business, you grow it, and then you realize I got to get into a traditional storefront. I mean, I think most people, unless you're in like Chelsea Market or some like significant experience, right? Like you mentioned, like experience. It's like most people want to be in end up getting into traditional spaces. I feel like, because it kind of depends on what your business model is.
Very much so. The flex space is lending itself more toward the creative aspect, because the fit out is where people are finding a challenge.
Yeah.
Owners, landlords don't want to fork out the money to facilitate a build out. And if they are putting some funds in there, they're looking for 10 plus year leases. Whereas people are 10 years, it's a long time. And people are very hesitant to commit to that timetable. So then given the
situation right now.
Exactly. Then the onus goes back on them to accommodate this fit out to look like how they want their business to look, but construction costs are high. So now you're finding yourself in a place where you're back to looking at interest rates, because if you take out a loan, how does that factor into
the economics? The economics just don't work
exactly.
for especially these smaller tenants that kind of
exactly
are a couple years into the business or whatever.
right,
It just
or
doesn't
starting
work.
a new venture.
Yeah.
I'm working with a group right now that is looking to create a newer concept that creates a space where adults and kids can coexist. It's like a play on a co-working space that allows for kids to be accommodated.
I've been in a couple of those in other parts of the Philly, not in Philly, but
Yeah,
other parts of the country I've seen.
yeah, exactly.
Yeah. It's like a coffee shop where you can work, parents can work,
Exactly.
whatever, and the kids play in another
Yeah.
area. Yeah.
We're looking to get that off the ground here. We were literally told no because the owner had no familiarity with the
With the
concept.
business concept, sure.
Even though we shared some links,
Yeah.
one was local, the other two were out of state. They didn't want to get behind it because there's no certainty for them. They couldn't attach themselves to this business is going to produce XYZ.
And that's sort of ties back to like the supply demand imbalance
Very
of
much
our
so.
suburban Philly market. Like if there's, 60%, 40%, whatever it is, a high percentage of vacancy in the market, like landlords get more flexible about stuff like that, right?
Absolutely.
But when you've got pretty tight vacancy in a market like suburban Philly, like ours right now, like your landlords are more critical.
Oh, very much so.
Of a lot
And
of
they
those
can be
things.
picky and choosy because even though they're losing money right now, it's just a matter of finding the right tenant and securing them for a longer tenancy.
So I'll take this from the owner perspective. You take it from the broker perspective.
Sure.
You're in the market right now with a tenant. Like, you're in the market right now with a tenant. How do you position your tenant, your client, like to be competitive in a difficult landscape right now where the landlords control a lot of the leverage?
Absolutely.
And the tenant needs to be in space for their business, but has concerns about, cost and maybe outlook and stuff like that. I mean, how do you jump into that?
So I try and find the landlord's pain point. What is the experience that you've been having? Have you been getting a lot of inquiries and nobody has decided to move forward? Are you in a space where you are losing money, or your site is situated somewhere that the ingress and egress is challenging, so people are like, I don't really want to deal with that. So you're looking for a more specific type of business that maybe doesn't need as many customers. I try and figure out what their pain point is while they still have a tangible asset that they can wield however they want.
So you're basically saying you position your client
to remove
check those
that
boxes.
pain point.
Yeah, I gotcha.
And then lead with financials.
That's one way of being competitive, sure.
Yes,
Yeah.
I have to lead with financials and show them, hey, these people are a sure bet, as sure as you can get, because they're personal. And I don't argue the personal guarantee at this point in time.
Sure.
Even if you have secured financing, I'm showing you that no matter what,
It's rare for landlords to waive that, right?
exactly. God forbid something happens with their financing, it falls through or whatever the case may be. On their own, these people are solid and have the wherewithal to be able to accommodate at minimum the amount that the overall lease term will cost.
Yep.
So that this way their guard is down a little bit more. And then if it's a non-traditional use, like a new venture, then I also lead with experience. What gives them the authority to enter into this vertical? This may be their first venture, but the wealth of knowledge and experience that they have outweighs, take away the first. This is, yes, their first brick and mortar, but not their first foray into this vertical. And I think that all those things combined, knowledge, expertise, financials, and then removing your pain point, I'm looking to solve a challenge for you and put money in your pocket. Just give my people a chance.
Cool. You must be good at what you do, because I was gonna say like the opposite of basically what you're saying. Not the opposite, but like, from the landlord side. Yeah, I would say the same thing. I mean, I wouldn't be focused on as a landlord from a landlord's eyes, right? The investment eyes. I would be focused on, in this market right now, what are my tenants? What are these prospects' financials?
Yes.
What's the business plan?
Yeah.
Right. And then, I think solving the problem that you have currently in your property makes a lot of sense. And sometimes bringing in a user that may help solve the next problem, like, you're trying to get to a certain type of use in your center, while bringing in, somebody that's drawing children and parents, maybe helps you capture that,
for your other
whatever coffee shop or whatever other business that you're trying to go after.
Absolutely.
But yeah, I think in today's environment, as a landlord, and even as from the tenant perspective, like, I think the business plan is the most important in trying to be competitive in this environment.
Because it allows the people to get naked and vulnerable.
Yeah.
And I think because I primarily was a listing agent and worked with sellers to manage their asset, I started thinking from that perspective. What's in it for me? I'm set. I have this property. You're going to come to me. So now that we're coming to you, we've got to take this time that you're giving us and making it worthwhile. And so I got to think for you in a way of, let me answer your questions before you even have cause to ask them.
Right.
And if I present that, then first impressions are lasting, because then you'll see, hey, these people are serious. They have their ducks in a row. So I think the poise that the broker has also is important for the tenant. As a client, you got to align yourself with somebody. I love what I do, and hopefully it resonates and translates to the people that I work with, because I try to be as hands-on as possible, so that I really intimately understand what you're doing, so that I can be a mouthpiece for you.
Right.
If the owner or landlord asks me a question.
So I mean, like, little off topic, but relevant. I mean, if you're a startup business or an early entry, I mean, any business really should be using a tenant rep broker, period.
Right.
In my
Agreed.
opinion, in our opinion, right?
Yeah.
But I feel like it's particularly important if you were a startup or early entry business or local group that's trying to expand, because you're one group that's got very little to no track record, and your broker brings all this world of experience and also knows probably most of the landlords in the market and has a reputation. So it's like that reputation translates over. It's the same reason why you use a broker when you finance deals, because it's that relationship in between the non-relationship.
Yeah,
so
absolutely.
Like, from a landlord perspective, if a tenant comes direct, like, okay, it's great sometimes, but it's like, who are they really? Do they know how to sell the story? Do they know how to navigate the process? I mean, we often see better packages, if you will, when it comes through a tenant rep broker who knows how to position the tenant.
Absolutely, because people are tired. They don't want to have 92 conversations. They want to whittle it down and minimize it to, let's get to the down and dirty.
Yeah, qualify, check the box.
Absolutely. So if I know that I don't want to annoy the owner, broker, landlord. I need to ally with them.
Yeah.
I need them to understand, hey, I wouldn't waste your time. I've already done my due diligence. I've vetted this. I may call you with a couple of preliminary questions to find out what's happening. But outside of that, my job is to make sure that I have prepped my tenant to know what this opportunity offers and what they're going to have to bring to the table in order to be eligible for it. Because that's the first question that I get. Is this a startup, or is this a franchise or established business? And the moment that you say it's a startup, people are already a bit turned off. I don't want to deal with this.
I know.
And then I'm able to say, yes, it's a startup, but I lead with the financials and I let them know, hey,
and then they ask
they're already in this vertical. Don't worry.
And they ask the business plan, and you go back to the client, and they say, "Well, I'll put one together." And it's like, "Well, why are we even here?"
Yes, exactly. That actually happened to me yesterday.
I'm sure.
I have a business plan, but one portion is not together.
It's not done yet. Yeah.
And I get that. But then it will minimize the type or level of places that I call.
Yeah.
I'm not going to call somewhere that was just like in terms of a daycare. I'm not going to call somewhere that was just working with a franchise and then say, here's my one-off person, because they're accustomed to dealing with people who have dollars.
We're wasting our time here.
Exactly. If you don't have dollars and now we're coming to ask for TI, they're like,
and plus,
do your own stuff.
Maybe not even wasting the time. That's the wrong word, but it's like until you get your act together, like you're ruining your first chance at going to that.
Right.
Like your first impression is already like, boom, it's terrible.
You don't have a foundation.
Get your stuff in order, then we go back.
Right, because then you can numbers don't lie.
Yeah.
And in business, math is sexy. People want to hear because it tells a story. They want to be able to understand year over year, what are you producing? How much money are you making? If you're making money, if you're making enough to be able to accommodate what I'm charging, then you're still able to satisfy your customers. It seems like we can have a symbiotic relationship. But if you don't know what you stand to gross, there are too many factors that are unknown. And right now, people are grasping for certainty. People do not want to, unless there's the promise of this being a lucrative venture, people don't want to venture off into a world where there are more than two uncertain factors. And without historical information, everything is left to chance.
Yeah.
And people, we're in too much of a transition, especially with tariffs, interest rates. We were waiting with bated breath to find out what's happening. Now we've got our answer. Things are staying flat. People now have to pivot to that. And I don't think that owners and landlords are in a space where they're like, I'll pay my taxes and I'll pay whatever mortgage I have before I take on somebody that can possibly be a headache down the line.
Liability or anything else.
Yeah, absolutely.
All right. So keeping it moving, I guess, when we talk about leasing, we've got multiple types of leases and then all different kinds of things that hang off of them. Like leasing is such a complicated thing, really. Like the sale is an easy transaction if you really think about it sometimes.
Yes.
Leasing is just like ridiculously complicated.
Very
oftentimes.
much so, because there are so many nuances.
Yeah.
That you have to think of. You're looking at how much is the escalation? Is it yearly? Is it quarterly? Is it every 3 years you're escalating? Like you really have to look at the financial position of the tenant, your client, also looking at what is the landlord asking for.
Sure.
Does my tenant need that to be modified in any way? And if so, how does that minimize the owner or landlord's bottom line? And how can I change it so that you maybe even out? It just might not be right this second. Yeah. There's so many things that you have to think of. And the more creative you have to get with a lease, which is one of the reasons why I love commercial, you can enlist an attorney. Yeah. Whereas on the residential side, as the agent, you're doing a lot of that thinking. I mean, it's more cut and dry, but there's a
lot of triggers and dates and
exactly.
Contingencies in a lease that you don't even, like, somebody who's not skilled in leasing doesn't really understand. But even further than that, it's like attorney written.
Yeah. So the onus isn't really on you to do it, to write it and make sure that it works. There's another set of eyes.
You do business terms. The attorney writes the legalese. But starting from the top. I mean, really, the first thing, really, I think that creates the differences is the lease structure, like the general lease structure, right?
Very much so.
In the broadest sense, you've got your net lease deals, right? Your single, double, and triple net lease deals, the N, double N, triple Ns.
Yep.
You got your gross, right? Your modified gross, and your full service situations.
Few and far between now. Full service.
Well, unless you're in a co-working style environment, you're right. You see more of, I think, modified gross probably.
Yeah.
Although nets, especially in retail, and flex now are really
the triple nets
are really popular. But
they're a make or break. The deal.
So I have a question. So nets, everything's included, right?
Mm-hmm.
I mean, everything's not everything. Let me phrase it differently.
Okay.
The nets, the tenant is reimbursing or paying directly for everything. So the landlord basically is charging base rent and getting all of those reimbursements back.
Which whoever came up with that is a genius.
Taxes, insurance, common area, all that kind of stuff, right? Your gross and your gross modified, you're paying your base plus maybe some kind of like incremental increase or some little tangential that hangs off of it. And then your full service, you're paying one number and like everything's included. The insurance is included, the real estate taxes, the utilities, the whole 9 yards, right?
Yeah.
I have a question.
Hopefully have answers.
When you're going around, when you're showing, when you're working with an entry level client, somebody newer, startup, or maybe has been operating in a really small footprint and wants to kind of grow, what do they gravitate towards? And I know you don't have the choice sometimes because the landlord in the space dictates it, but like, what do you gravitate towards, and what are the biggest pain points with your clients?
That's a good question. I'm always surprised when I find a gross deal. I'm like, sweet.
Retail, we're talking retail now, right?
Retail.
Yeah. Okay. Yeah.
I think the majority of gross deals or opportunities that I've come across have been our listings. More often than not, especially for startups, they've attempted to do this on their own. And so when they attempted, they got introduced to triple net quickly.
Gotcha.
And so I haven't found myself in a space where I have to explain really what triple nets are. And they're not shocked by triple nets, especially the better the class.
Sure.
It's almost to be expected.
Yeah. In our market, that's outrageously high. Usually, I mean, it sort of depends where. But
the nets are going up.
Yeah. Well, taxes are up, insurance are up, insurance is up, everything's up. Yeah.
Yes, and because we are now officially, what is this, Q2? Where am I? It was just January. It was just December 31st. But now a lot of people are telling me, hey, we just got our reassessment and things are going up. Bethlehem Pike, Scott was like, yeah, we've got to increase the rent that we're asking for because we just got our
new real estate tax
assessments and everything, and we're going to need...
Assessments are up, millage is up,
everything is up. So yeah, I think more often than not, because it's such an ingenious idea for the owner landlord, I don't know why people would go gross or modified gross as a landlord. That's my question to you. How do you get them to be in that mindset?
I think it's challenging sometimes as a
I'm sure
mom and pop or even just a small investment company with not like true established management in place. The logistics of creating pro rata billbacks and managing those billbacks and then doing reconciliations at the end of the year with your tenants. Like, it's more involved. I think everybody thinks they want triple net, but like
it is.
As a landlord, do you really know what that involves and entails? Not always. So I think that's part of the reason.
That's a great answer. That makes sense.
We have a project over the Landmark, right, in Dublin.
Yeah.
That we started as a triple net structure on our retail, and we pivoted to gross modified.
Wow.
Modified gross, whatever. Because we realized the apartment component, the commercial component, like doing the billbacks, doing the reconciliations is just a lot of work. And because we've got this apartment component, that's the majority of the reimbursable, really.
Yeah.
It just made more sense to do a modified gross structure. We also thought about who our tenant base is.
Yes.
And I think like, you were saying that most tenants now are sort of getting it, but I think it's true. But I also think there's a handful of tenants that just don't get it.
Yeah.
And
definitely.
when you tell them like, hey, your rent is like $30 a square foot.
But wait,
and plus,
there's more.
and plus this extra $6.
$1,500
a square foot.
$5,000 extra.
Yeah, they're like the end plus just doesn't sit well with them. But it's funny because in theory your modified gross
is still
and your net should be the same.
Exactly.
Your net your triple net deal should be the same all in.
But people just give me the bottom line.
The optics throws them off, I think.
Yeah,
so,
very much so.
Yeah, so that's why I think landlords do it.
Yeah.
Like they pivot because you're trying to think about who your tenant base is and what you're capable of physically doing. It's just tough. And do you have everything broken out? That's the other thing too. If you don't have certain things broken out, it's kind of like tough to create those pro rata numbers. But
that makes a lot of sense. Great answer. Yeah, the tenants, I think, and then depending on how badly they want the space, they're willing to compromise and try and negotiate the nets. But I'm like, the nets are not negotiable.
Yeah, you focus on, there's not negotiable. We've dealt with this a couple times. They're not negotiable. You just, you focus on the base rent.
Exactly.
Yeah.
Exactly. Yeah. So then I, in instances where I have had to educate them, I'll do the numbers and I'll let them look at the numbers. And if they determine, hey, this is outside of the scope of my budget, not a problem. We can go elsewhere. But now at least you've had an education in what the triple nets are.
Yeah.
The nets will vary depending on the class and the location, the landlord, owner. But there are options out there, so you don't have to feel forced. And I always stress that it's a balancing act because I understand the perspective that the landlord is taking, and I also want to be respectful of the broker. Everybody's got to make money. But I work to secure my relationship with my tenants to say, hey, guess what? If you can't afford this, it's okay.
Yeah.
Let's move. Because what I'd rather come back in 5 years and see you still in business than for you to bite off more than you can chew, and then you're in a financial bind. No, thank you.
And there's ways to manage around all this stuff. Like some tenants, entry level businesses stuff, think that this triple net structure is like the landlord's carte blanche to like build everything and anything back, and it can go way out of control, and it certainly can. But that's where like a good broker comes in place and a good attorney, where you structure around that stuff. Like there's ways to cap your increases so you can know what your maximum exposure is as a tenant. A good landlord will do reconciliations. It should be required in the lease for them to reconcile. So they're actually billing you back what they're actually spending.
Exactly.
Not like 15% management fee to themselves, right? Like, right? Or whatever their car automobile charges in the buried in CAM. Like, if you do a lease the right way and negotiate the right way, know what landlord you're dealing with, like that's
everything should be on the up and up.
Yeah, you can figure all that stuff out.
Yeah,
or you can manage. You can control some of that stuff. Yeah.
I had an experience with a tenant. They almost didn't get the space. Ziza. Almost didn't get the space because the base rent was beyond. It was just exorbitant. And I was able to crunch numbers and present different scenarios and show them like, okay, here, if we start here, the escalation puts you here. Unfortunately, the escalation is not negotiable, even though we tried. And then the triple nets are not negotiable, even though we asked. We got clarity on some of the elements that they were including in their CAM, so that the tenants knew what to look for. But I was able to itemize everything out for them so that they knew, here's what comprises your CAM triple net costs. And this is why they exist, because the landlord was able to shed some light on that. Here's your base rent. This is your total monthly responsibility. And this is what it will be year over year. And because I took the time to break it out, we were able to get the deal done. And
it's transparency helps with everything. I think that's what scares people about the nets. They don't really understand. They just think it's this carte blanche, like I was saying. But really, you got to understand. So it's a good way to do it, breaking it out like that.
It's probably one of the highlights of my commercial career, because taking the time to really understand it and break it down, they received it so well, and they were so grateful because they understood, like, hey, we're about to walk away from this opportunity that just seems insurmountable, but with more transparency, a little bit of due diligence and investigation, we were able to find a happy medium. And the landlord and their team had to meet about it and talk about it and review, but the data was there to show you're not going to get your money up front, so to speak, but as time goes on, you're going to be right where you wanted to be market-wise
Right.
and financially.
Right.
So
Right. Cool. If we flip it for a second, different lease structures are good for certain tenants. But what does it do to value?
yeah.
Right? Like as a landlord, as an owner, maybe that's more of a question I'm asking myself. What does it do to value? Because we know that in the market, an investment that has a bunch of net lease, triple net leases on it, or one absolute net lease, or a whole handful of gross or modified gross leases, priced differently.
Yeah.
Right?
Yeah.
You do mostly owner occupied. Let's start with that. You do mostly owner occupied stuff, right? As opposed to investor deals.
Yeah, I would say so. With the exception of like your Kimco, Brixmor. I haven't done anything with Brixmor yet. Vantage.
Yeah.
And Velocity.
Gotcha.
But outside of that,
okay.
Yes.
Got it.
Some are more owner occupied.
Got it. So you're
best of both worlds.
Yeah, best of both worlds. But your perspective is a little not skewed, but pulled, gravitates towards one end of the spectrum.
Yeah.
Obviously. Okay. Yeah, I mean, what's better? You're an investor in the market. You want to buy triple net deal? Or you want to buy a modified gross or gross deal? Or does it not really matter to you?
I think value is relative. It depends on your resource capital. If you have the wherewithal to implement the people, like you were saying, maybe a property management company that is charged with managing the day-to-day and then also managing the chargebacks and making sure that everything is apportioned appropriately per quarter, year over year, I take triple net.
Yeah.
However, if I am just now getting into commercial real estate, that's my first venture as an investor, I consider that scared money. Unless I've got $1 billion in the bank just chilling that I don't necessarily need to tap into, my day-to-day, I'm still a regular human.
It's supposed to be a passive investment.
Yes,
right?
Exactly. And so it may be passive in a regard, but if my tenant leaves and I now have to step in and accommodate.
It's that conversation we had last 2 weeks ago.
It's not really passive.
It's definitely not passive.
So you always have to have a reserve. And if my reserve isn't big enough to say, hey, for the next 5 years, come hell or high water, no matter what, I can take care of this on my own if I need, then I will do a modified gross so that some of the onus is on the tenant. You do your utilities and you pay me my
X%.
My X%.
See, I think it's interesting because kind of piggybacking on what you said, I think it's interesting. It kind of depends on, like, if you're a landlord of a building and you're thinking about how I create the most value by structuring my leases the right way, I think you have to not just do the leases, you got to do the rest of the component, all of it, thinking about your exit. Like if you're if you're a mom and pop owned center or building and you think your buyer is that same buyer and not like some large firm or fund or institution, whatever, it's not just the leases. You got to put the management in place.
Yes.
Like it has to be, the whole solution sort of has to be thought through. But I think in general, the net lease structure does create more value.
I agree. It does, but you have it takes money to make money.
Yeah.
I think that's that situation.
Yeah.
Now, if you buy something that is perhaps maybe a value add, you don't have the resources to add the value at the time. You want to just put your toe in. Hey, I'm here.
Yeah.
Here's my stake in the ground. I've done something. On the flip side, selling it, you could also sell that upscaling of the property.
That could be the value add. Take it from gross to net lease structure.
Exactly.
Harder to do than it is to say.
Okay.
But definitely that's a value add pitch.
Because
for sure.
then I feel like you could always in terms of your exit, you could always say 9 times out of 10, I'm going to sell this because the right person will see the value and know that they can take it up a notch. Or worst case scenario, you keep it as is. It's still cash flowing.
Yeah.
If it's not cash flowing, different story. But if it's cash flowing.
It's funny. I know a handful of people who love gross lease structures
Yeah.
just because of the percentage increase, the escalation increase
Yeah.
on the base rent, because
Yeah.
your base rent's up here in theory, and your base rent on the net lease
Yes.
is down here. So
Yes.
your 3% is always this much higher. So
Exactly.
I know people who could care less about the reimbursement process
Yeah.
and exposure to increases. They just want that higher.
Absolutely. Because I feel like the net might be stagnant for a while. It's basically like I have this investment, but I'm not expending money to pay for it outside of the management team. They get paid, but perhaps maybe they get paid from the proceeds of the building. So it is a net, so to speak.
Definitely is, yeah. For most part.
With the growth, that's such a great point, because you have this base rent that technically covers what you need to cover.
Yeah.
But each year,
And it's so much higher.
Yeah,
3% on $30 a square foot versus 25 is a lot more.
Absolutely. And the people, you're now locked into a lease for a 5-year period of time. You've already agreed to the escalation.
Yeah.
You're in. You're not changing it.
That's one other reason why a tenant should also think really about being in a net lease structure, because sometimes you just that savings you can make on your base rent increases, and if you structure your exposure on the nets properly, like, what's the harm in it?
Yeah, absolutely. Oh wow, yeah, that's really good. I guess looking at it apples to apples, you kind of work in the moment based on the situation, but
I think what we learn here is that leasing is complicated.
It is complicated. It's low-hanging fruit, but you need to have the right person navigating you through. And you also, as a tenant, I think as an owner, you need to be clear about, hey, this is where I need to be profit margin wise. As a tenant, you need to understand, here's what I can accommodate. Because let's say, your sales are down. Can you still be able to accommodate this month over month, year over year? And if you can do that, there are ways to navigate and structure it in such a way that will help you make money. It's supposed to be a launch pad for you to be able to establish your business and still grow. And it's also supposed to be an opportunity for the landlord owner to have a business that year over year can grow. There has to be space for each party.
Yeah.
Same with the gross. The owner is going to grow. They're going to have their obligation with their taxes and insurance and so on. But I think it's more attractive to people who are getting started. They know I pay XYZ a month. I don't have to think about the nuances. It's $2,500 a month, period. I know I can gross $3,300 a month, and whatever I net, I take that out. And
it's a math exercise.
It is math.
So
math is fun.
so I think if you're a landlord or you're a tenant, the key with leasing is to know what you want, where your thresholds are, where your bottom and top lines are.
Yes.
Both on the financial side and on the sort of, I don't know, what you call it, fundamentals, just understanding who the tenant is, your requirements and what their uses are. And on the tenant side, know what your landlord is and what your co-tenants are and that kind of thing.
Yes.
And then I think the last thing, having your team in place also. That's absolutely. Maybe two more things. Having your team in place, your broker, your attorney.
Yes.
Probably contractor.
Yes, contractor, definitely.
And or banker.
And please have an attorney. A lot of people come in here and don't have an attorney.
Yeah.
And it's a bit of a sticker shock.
Yeah.
Have an attorney.
Have an attorney or be open to using an attorney.
Yes, or be open. Yes.
And then finally, I think the last one, which we didn't touch on, but I don't think we need to go into crazy amount of detail, is just the partnership component. Like, be a good tenant, be a good landlord, because you're, unlike a sale, you're stuck with this person.
You're in it to win it.
Yeah.
Both. Well, and both people have a vested interest. And I think that if you can rally around that, I'm not necessarily here to be your friend, but we are partners.
You're partners,
by way of proximity.
Yeah.
And we are entering into this venture. I took a chance on you just like you took a chance on me. Do what you do best, manage and run your business. And landlords, owners, be a little flexible. Like, try and put yourself in their shoes. If they're asking for something unreasonable, okay, fine.
Yeah.
But if they need something, be attentive, because nurturing that rapport and relationship might get you another 5-year executed option, as opposed to now you're back at square one trying to find somebody.
Definitely. So do those things, think about those things.
Yes.
And it's a good time to be a landlord, and it could be a good time to be a tenant if you get your sort of process in order and have the right team behind you.
Absolutely. There's the right shoe for everyone.
Definitely.
So yeah, it's about the right fit. So
cool. All right. Well, hopefully everybody learned a good bit about a topic that we can't get away from anymore in this market.
Absolutely.
Leasing,
or some perspective. Even if you didn't learn, maybe made you think about, oh, I didn't think about that.
Yeah, for sure. Definitely.
Cool.
All right.
We'll see you back.
Sounds good.
All right.